Operationally as well, M&M continues to do well in both the tractors and the SUV space. I just want to reiterate that this is not something that is in the works for now. It's just an assumption that HSBC has made that if they go down this route, it'll be big value adding.
Oh, absolutely. And, we'll keep an eye out on that. I mean, you got the Nifty, which is going to start about 25 points higher. The pre-open is indicative of that. The Sensex is up about 55 odd points as well. So lots and lots of stocks to track as we begin a new week. And, the Tata Group stocks, I think we'll kind of pay attention to, especially Tata Chemicals out of the sharp rally that we saw on Thursday. But there are many other news-based stocks as well. The first trades are coming up. So it's a slightly lower start in the Sensex. I think you saw some green for a second and then down 30. The Nifty is down about 5 points or so. So this is as flat as they come on the indices. So you got 22,468 in the Nifty. Bank Nifty is down about 0.25%, 47,719. And you got the Sensex, which is down about 100 points or so as well. Mid-cap index is up a little bit. And I think we'll have the small cap index for you shortly as well. Market breadth is a little over 2:1. But these are, stocks are just opening, so too early. But that's what we have. Absolutely flat right now. Sonia is here with more rates. Sonia.
Oh, thanks a lot for that. So as you rightly pointed out, it's flat for the frontline indices. But if you look at the broader markets, right, that's where a little bit of the pressure is creeping in right now. The Bank Nifty is also down about 110 points. And I think the small cap index is the one that started with a little bit of pressure. Mid cap index is absolutely flat as we speak. Just a couple of stocks to start off with. HDFC Bank, let's take a look at that. CLSA has downgraded HDFC Bank to an outperform from a buy, cut its target price to 1650 from 2050. So that stock is under a bit of pressure. M&M is the other one on the flip side, which is looking good. HSBC has raised the target price on M&M to 2300 from 1900 earlier. Interglobe Aviation, that large block deal in the works. Gangwal is looking to sell 5.8% stake. So Interglobe Aviation seeing some pressure there, down almost 1.5%. Insurance companies are also in focus this morning. You have Max Life, SBI Life, ICICI Pru, all reported very strong data, both in terms of the APE growth as well as the premium growth this time. So all the insurance companies should come up for you in a bit. SBI Life is up 1.5%. It has been one of the stronger ones of the lot. And then you have ICICI Pru as well as Max Life that will show up for you in just a bit. So take a look at that. HDFC Life too has been doing well. ICICI Pru is the one that has seen a Feb premium growth of 33%. So I think it's outperforming its peer set. And Max Financial is up almost about 2.5%. So looking good over there. Titagarh Railway is another one I'm looking at. A 1,900 crore order is what it has won from the Railway Ministry. So just look at Titagarh Railway this morning. That one actually has been up and about for a while. Today it's up 6.5% after receiving that fresh order of 1,900 crores from the Railway Ministry. Some of the PSU stocks could perhaps be under pressure this morning as Kotak says exit PSUs after a strong run-up. So we'll watch out for some of these names. But talking about PSUs, RVNL has received a 543 crore LOA from the Madhya Pradesh Metro Rail. So I think RVNL is another stock that is looking pretty good, 7% higher now on RVNL this morning. So a lot of these names, Voltas is also in focus this morning, up almost about 1.5% over there. So a lot of PSU companies that are receiving fresh orders, whether it's RVNL, whether it is Titagarh Railway, all looking pretty good this morning. Back to you.
Okay, all right. Thanks a lot for that, Sonia. Well, just take a look at some of those big movers actually. NLC India, you have that OFS that's in the works. Today is the day when retail can subscribe. The OFS is at a sharp discount in comparison to the CMP, but the institutional cutoff was at around 217 rupees. Explains why there is fair bit of action out there, up close to around 7%. RVNL, as Sonia mentioned, is running away. Dwarkesh Sugar is up close to around 6% odd in today's trade. On the flip side, a few of these Tata Group stocks, they're giving up a goodish bit. Tata Chemicals, now locked, down close to around 10%. Tata Power, down close to around 4.5% as we speak. UCO Bank is another name that's pulled back close to around 5%, and that's coming up as one of the top volume movers that are pulling back. So keep an eye out on that name. Rico Auto, actually, it's been in a world of its own. The stock is up close to around 35% in the last 1 month or so. Today as well, up close to around 4%, and coming up as one of the top volume buzzers in trade today. So quite a few movers from the broader markets. HAL add to the list. From the FNO movers, that's up close to around 3% as we speak. Indian Hotels as well, seeing some profit taking now. Been a big move in the last 12 to 18 months. Today it's down close to around 3%. And that large trade on Interglobe Aviation, that's got done. Explains why the stock, from being down close to around 4.5%, it's almost moved into the green. Prashant.
Well, market breadth is almost now closing in on 1:1. That's the picture. 1,100 stocks are higher, 1,000 stocks are almost 1,000 stocks are down. So, but it's a vibrant start, right? Look at some of these names. Top of the list, of course, is still RVNL. I think, as Nigel mentioned, HAL is up about 3%. NLC India. So it's all PSUs. The three top volume-led gainers on the NSE are all PSU names. Two are up 6% and HAL is up 2.5%. Max Health is up 3%. Max Health has been recovering, coming off the lows slowly but steadily. The low, of course, last week was, I think, about $700 at about 770 now. The life insurers, ICICI Pru is up another 3.33% or so. Again, ICICI Pru has moved up from about 530, 3-4 days back to about 600 plus now. Suzlon reversed after selling off. I mean, it had hit a low of about 37 last week, and it's back at about 42 now, just under 42. Titagard, I think we mentioned. There is what else? Lodha, that is Macrotech Developers, 7% move on Lodha. It's coming up with large volumes for this point in the day. There is Torrent Power, which is up about 3.33% this morning. So there is, a movement there. Max Financial Services, so these insurance companies, look at GIC, RE, reinsurers as well. They're all looking good. Ethos is another one, which is up about 4.5% right now. By the way, as we speak, market breadth is flipped. But I just want to focus on some stuff on the downside as well. Tata Chemicals, of course, it's down 10. 1183. It rallied from 950. A one-way 40% rally from 950-ish levels. Tata Power will come up. Tata Power was up 8% on Thursday. It's giving back 4% this morning. Tata Consumer also moved. It's down 3% this morning. Rallis India, also a Tata Group company, had a sharp move. That's down 5% this morning. Indian Hotels, again, a Tata Group company, 2.5 lower, 572. Tata Investment Corporation, just a one-way move on Tata Investment Corporation, is one of the big winners of 24, by the way, so far. It's down 5%. I think was up 5% on Thursday. So a lot of these companies are sort of giving back gains that we saw fairly recently. And of course, as Sonal was mentioning, GAIL in news, GAIL is down about 2.5% as well this morning as well. So it's quite, at least on the indices, 9 or 10 points lower is what we have. And market breadth is, flipped into the negative slightly, but it's happened already. Mitesh is with us still. Mitesh, quick view on the open and any trades here?
So no, I'm not taking any index trades, purely because of the fact that it's a very quiet day as of yet. But my belief is that the trend is up. So if we get this dip, kind of goes down to about levels of 22,420, 22,430 zones, then I think, taking a long trade with a stop below 22,390 could be a good idea. Wait for that dip, intraday dip if it happens. Otherwise, just patiently watching the market, seeing if there can be any stocks to be traded on the long side.
All right. Mitesh, we'll come back to you for more a little later. Appreciate you joining in. Hiren Ved is joining us now, Director and Chief Investment Officer, Alchemy Capital Management. Hiren, good morning. Great to have you with us here on the program. Thanks very much. Hiren, let's just start by talking about the PSU call from here. Our colleague Hormuz was summarizing what the folks at Kotak are saying. They're picking out some of these stocks and saying, well, valuations are just absurd now in many pockets. It's obviously one can't make a sweeping generalization, but what are the pockets you like and what are the pockets you'd avoid there?
So I think, PSUs in general have been the leaders of this bull market, right? And obviously one has to be pretty selective, but I think the starting point was two. One is that the valuations relative to everything else in the market were cheap to begin with. And secondly, the largest strategic shareholder, which is the government of India, right? They have taken several steps across businesses to increase the value of the PSUs. And while I haven't read the entire report, but I think I did see a headline which says that it's all top down. But it has to be top down because, if the largest stakeholder takes broadly all the right calls, then I think what happens initially is that you get a valuation re-rating and then earnings also kick in, right? Again, as you rightly mentioned, I'm not making a case for an unbridled across the board rally in all PSUs like we have seen. But I think there is merit in a few select PSUs where I do think that the trajectory of business has substantially changed, especially if you look at the defense pact the kind of order books that have come, or in some of the power utilities where suddenly power has become a growth sector from a utility sector.
Okay, interesting. By the way, one space that's really surging, and I think Prashant also mentioned it, is the real estate space. Macrotech Developers is now at a fresh high, fresh 52-week high that is. 7.5% rally. It's rallied 23% this year already. Hiren, hi, good morning. There's a lot happening, right? There is this weekend, actually, I had a chance to go on the new Trans Harbour link, the Atal Setu, for the first time. And it is massive, the kind of infrastructure connectivity that we're seeing in Mumbai over the last many weeks and months. But do you think a lot of this is already priced into the Mumbai-based developers? And do you think it's a little risky now to get in? Because valuations also are looking a bit uncomfortable. Your thoughts on the real estate space, specifically the Mumbai-based guys? Now you have Prestige also that's entered this space.
So, Sonia, I think overall, real estate as a sector is likely to do very, very well. Mumbai also, by the way, is one of the largest markets and one of the largest premium markets for real estate in India, along with NCR and Bangalore. But I think Bombay and Delhi in that way stand out because the propensity to buy premium real estate is unparalleled in these two cities, right? I think I wouldn't, again, one has to be selective, but I think the real estate sector has a long, long way to go, in my view. There will be intermittent bouts of correction and consolidation, but we continue to be very, very bullish on if you're asking me Mumbai real estate, I think real estate in general, we are very positive. But I think even Mumbai real estate will continue to do quite well, even from here.
Okay, Mumbai real estate. All right. Hi, Ren. Good to see you in. I wanted to ask you about what's your view with regard to this entire aviation space? We had a large trade that took place on IndiGo Aviation a few minutes ago. More than 5% equity changes hands. The stock was down 4.5%. The kind of appetite we're seeing, stocks moved into the green. So, we know about the rising airfares, leisure travel as well. How would you approach this space? There are only two options. One is SpiceJet, which has been a big drag, but now they've got some funding. They're trying to turn things around. And there's IndiGo Aviation, which has been the leader of the pack.
So, Nigel, frankly, we haven't looked at aviation, as an investment opportunity. Obviously, the choices are very limited. In fact, at this point in time, there's only one carrier that you can really bet on. But I think it's very symptomatic of the point that tourism as a whole is booming in this country, right? And I think there are several ways to play it. One is to play it through the hotel and the hospitality sector, but obviously, airlines is another way to play it. And at this point in time, there is really very little choice other than IndiGo. We find it very difficult, because, again, airlines have done phenomenally well. But we've tried to play this theme more through hotels rather than through aviation.
Okay. And what would the pick be out there?
Well, all the hotel chains seem to be good, but I think our exposure is to Indian hotels.
Okay, the exposure is to Indian hotels. The other stock that we have to look at this morning is Trend. Just look at the way it's zooming. A fresh high on Trend this morning, 6% higher if you can just pull up that stock. And it's had a dream run. I mean, this year Trend is up almost about, 40%? If you can just look at this, just look at the way it's booming now. In the 6 months, it's doubled the stock. This is a success story in affordable fashion, right? I mean, if you look at what Zudio has done in the last 6 months, Hiren, it's given stiff competition to almost all regional retailers, whether it's V-Mart, whether it's Style Bazaar, V2 Retail, whatever, right? And it's also come into its own in terms of an affordable fashion strong brand. But from a stock market angle, from a retail investor's perspective, do you think one has missed the bus on this one, or do you think that it's a long-term structural story?
I think organized retailing in India is still very, very young. There is significant opportunity for growth. Obviously, Trent has literally out-executed everybody in this space, and the market's rewarding Trent for that. But I think that the runway for Zudio and other formats is still significantly large, given the size and scale of our country. Very few, apparel retailers have really hit it big in that sweet value spot, right? I mean, the low ticket consumption in India has been struggling, but I think the value fashion segment that Trent has executed via the Zudio format, I think has been extremely successful. And, one should not forget, but, especially the kind of focus, retailing is an extremely focus oriented business, right? Margins are very thin and execution has to be top class. And I think it's in a very difficult industry. Trent clearly stands out. And unfortunately, there aren't too many companies in this sector which have executed the way Trent is executed. So, I mean, I can't advise your retail investors, but all I can say is that the runway for growth is still significantly long for a company like Trent.
Okay, the runway for growth is significantly long. Just wanted to point out a couple of more stocks before we move on. Blue Star, by the way, is at a fresh 52-week high as well. It's been a very strong mover. This year, Blue Star is up 40%. And there are a couple of new launches as well. We'll talk about that in a bit. By the way, I want to also talk about gold, right? I mean, 8 straight trading sessions, gold has been hitting record highs, and the gold ETFs are performing very well, whether it's the Axis Gold ETF, the Birla Sun Life Gold ETF, all of that performing very well. Hiren, just before we let you go, a lot of the other asset classes are also coming back in a big way. While equities is sort of moving to the, to the sidelines, you have gold that's hitting fresh highs, you have Bitcoin, I mean, cryptocurrencies are coming back in a big way, real estate is doing well. What should the best asset allocation strategy be for the rest of the year?
Sonia, my asset allocation is all equities, but I think this is one of those rare phases that we are seeing, the sort of Goldilocks kind of scenario where all asset classes are going up. It also, to some extent, reflects the risk on globally. I think, again, I'm not an expert on other asset classes, but I think people should diversify across asset classes. Having said that, I think from an equities perspective, we wouldn't have asked for a better setting where earnings are strong, liquidity is still reasonably good, and I think we are seeing a structural move in equities, and I think we're, at least the price action in most other asset classes also looks like to be quite secular from here onwards.
Okay, all right. We'll leave it at that, Hiren. Have a great week. Thanks a lot for joining in. And since we were mentioning Blue Star a while back, hitting a fresh 52-week high, let's talk about that company now. They've launched a new range of over 100 affordable and premium models of room ACs. And given the way the weather is going, looks like it's going to be a really hot summer for many of us, at least living in metros. The company says that they are witnessing significant demand in the room AC market. To discuss more on this development and the business outlook, B. Thiagarajan, the MD of Blue Star, joins us now. Mr. Thiagarajan, good morning, and thanks a lot for being with us on the channel as always. When you say significant demand, can you just quantify it for us? What are the demand trends looking like as we head into summer season? And how do you compare this with what we've seen in, say, the preceding few months?
Good morning, Sonia. It's a pleasure interacting with you. It's a relevant question. Room air conditioners is a seasonal product. All of us are preparing for a great summer season ahead. To put in context, last year, April was good. May, June was a washout due to rains, or what we call as the wet summer. The weather forecasts indicate that this summer season will be a good one. And we anticipate, to put a number as you wanted me to, we think the market will grow by at least 20%. And Blue Star's goal is to grow by 25% in line with our market share enhancement goals.
Okay, so you're saying the market will grow by at least 20% and Blue Star will grow by 25%. What is the time period that you're looking at? Is this for...
I am talking about the summer season commencing April to June. That is the Q1 of next financial year.
Okay, so you're saying that in Q1 of next financial year, in the summer season, Blue Star will grow 25%. Can you also help us with a full year number for FY25 as a whole? What kind of a top line growth are you looking at, given that your expectation is that this season is going to be so strong?
Yeah, there will be many twists and turns in this, that the summer season is coinciding with the election campaign. And normally, we have seen in the past some kind of slowdown. And post the election, we expect the economy to do well. So the festival season should be holding up as it had been this year. The penetration levels are lower, and therefore, one would expect the full year growth to be around 15%. And the Blue Star's goal is to grow by at least 20%.
Okay, all right. Hi, good morning, Mr. Tyagarajan, and always good to see you in. I think in the RAC business, your market share is at around 13.5%. And as you have been telling us, in the next year or so, you expect to go to around 15%, right?
That's right.
All right. I want to focus on the commercial AC business. Because there you have seen a sharp jump in the order book, and you have been saying that there is tremendous potential there as well. That's a far smaller market, I think, in comparison to RAC. But if you could tell us what is a rough market share you have out there? And there's an export opportunity as well, I believe, in the CAC market. So tell us more about that.
Thank you, Nigel. Commercial air conditioning market is much smaller compared with residential air conditioning. We will hold close to around 25% market share there overall. But if you are to look at the categories like a chiller or a VRF system, it may be different for different things. Like, for example, it may be around 20% market share in case of VRF. And in a scroll chiller kind of products, we may have close to 35% market share. But that is not relevant. The important thing is that we hold number 2 position in the market. Now, second thing is that this segment has got a lot of potential to grow. Shop, showroom, boutiques, small hotels, large hospitals, and even data centers. So it is a R&D intensive, manufacturing intensive product category, providing much better margins and aftermarket business as well.
Mr. Tyagarajan, hi, good morning. Is this, so for example, one of the areas where there is a large amount of build out expected is data centers across the country. Is that, typically a market that this segment addresses?
Yes.
Is that a growth driver?
Yes. In the electromechanical projects business, as I had mentioned to you in the past, there are 3 distinct categories there. The number 1 is buildings. And the second one is infra projects like airports, metro railway, etc. The third one is factories and data centers. We look at it together. And in data centers, we are a preferred player. We have been doing well. And we are having plans to introduce quite a bit of equipment as well there. For example, chillers which generate chilled water for cooling. And it's a important sector, a growing sector, and we have been doing well.
Okay. Could you talk to us? We've spoken about sort of growth broadly, the drivers, etc., and some numbers as well for Q1 and the full year. Could you talk to us about margins? And I think that will, again, go back to what we've discussed in the past, which is the announced capacity additions, competitive intensity, etc. Is everything still on track there? High competitive intensity, but you've maintained that you'll be able to do well.
The competitive intensity will be very high as we are entering the season. This battle will be bought in number of places. In the showrooms, it will be bought through the in-shop demonstrators. It will be fought through advertising campaigns. While IPL teams may be fighting, the brands fight there for the share of mind. And there will be battles with regard to the distribution penetration in important stores where the numbers are more. It will be a tough market. There is absolutely no doubt about it. We are going by our focus on go ahead and ensure that you have products at all price points. Sonia mentioned about that. We have launched products which are meant for all price points and differentiated products for discerning customers. That has been done. And a lot of money is being pumped into advertising campaigns as well. So going by the past track record, we continue to maintain that for the segment 2, our outlook, what we have indicated earlier, we are still abiding by that, 7.5% to 8%. In the segment 1, it is somewhere around 6.5 to 7%. That we continue to maintain.
Is there scope to increase prices across any of your products over the next couple of months, given that demand is so strong?
I do not think so. Everyone is trying to improve their market share. And I think the pricing will be under pressure.
Oh, okay. Pricing will be under pressure, you're saying, because there is, of course, this competitive intensity and everyone's trying to improve market share. So no scope to increase. Yes, go ahead.
You know, thanks to the PLI scheme, the domestic manufacturing investments had been very high. So when everyone have set up manufacturing capacity, therefore, they would like to gain market share and grow, because the PLI scheme is not, the incentive is not based on production. It is based on the incremental sale over FY21 figures. So it is a sales linked incentive scheme. So specifically in room air conditioners, it will be so. In commercial refrigeration products, we do have scope for improving our margins. Commercial air conditioning, there will be scope.
Yeah.
Okay.
You gave us some numbers, Mr. Tyagarajan. Sorry, you said 7.5 to 8% in segment 1. Could you just tell us, you said there will be pricing pressure, and this in line with what you've talked to us about competitive intensity, etc. Could you guide for the company as a whole?
Company as a whole, it will be at the current level of 6 to 6.5%. And we have been delivering around 5% at the PBT level. And so I do not foresee any major shifts that are going to take place in terms of commodity prices or exchange rates. It can very well take place, but I am making that assumption.
Okay. All right, Mr. Tyagarajan, final question before we let you go. What should your revenue mix look like between RAC and non-RAC? Because there's a lot of focus, a lot of steps you have taken even on the non-RAC business. So what is it now, the revenue composition, and how do you see panning out?
Nigel, it will become selective disclosure. The segment 2, it includes commercial refrigeration products as well as room air conditioners. So I will not be able to deviate from that. So that you can make an assumption that the number of units that is expected to be sold this year is around 10 million units. Blue Star will cross the landmark of around 1 billion units. And we have just done some calculation. In the market, we have so far around 65 million units or 65 million air conditioners are functioning. Now, in value terms, our market share is around 13.75%. You can compute that as well within our segment 2, how much is room air conditioners.
Okay. All right, Mr. Tyagarajan, we'll leave it at that. Thanks a lot for joining in and appreciate your thoughts here. So demand is very strong. Summer season is expected to be very good for the industry. A 20% growth is what they're looking at in room ACs. For Blue Star, particularly 25% growth. However, pricing could be under pressure because competitive intensity has picked up. Got that. Let's take a quick break on that note. On the other side, Jasveer Singh of Amber Enterprises will be joining in to talk about their business outlook going forward. Stay tuned.
Welcome back. Well, let's focus on Amber Enterprises. The stock is up close to around 80% the last 1 year or so. Q3 was a weak quarter for them with subdued revenue growth, but they are targeting margin expansion in the coming years, and also they are sounding very, very optimistic on the revenue growth from here on. Mr. Jasveer Singh, the chairman and CEO of the company, joins us on the show. Hi, Mr. Singh. Good morning, and thanks so much for joining in. Well, the past quarter was a little bit weakish, but I was looking at your con call and you're guiding for far better times to come in FY25 as well as FY26. Give us a few details. What kind of a revenue growth can you look at? And also segment-wise, how do you see things panning out? Because I'm looking at your breakup, the electronic division as well as the railways and mobility division has been growing at a very fast clip. Please go ahead.
Thank you for having me, show, and good morning. Yes, indeed. We started as a room air conditioner company, and then gradually we diversified into adjacencies, into electronics and railways, and then scaled those verticals up. In electronics, we are very optimistic. We started with PCBA 5 years back with just giving solutions in the space of air conditioners, and then we graduated into refrigerators, washing machine, other consumer durable products, and then we added wearables, we've added telecom, we've added smart meters now, and we've also added auto. And we are just about to get approval from the defense sector also in the electronics PCBA space. So we are quite optimistic, and plus we have acquired Ascent Circuits 60% stake, which strengthens our electronic EMS portfolio for the backward integration. It's a company which delivers complete PCB applications in various single-sided, double-sided, and multiple-sided and multiple-layer PCBs. Overall, if I think electronic vertical, we have already guided, and I'll repeat it, that we will double our revenues in next 2 financial years. And we are very optimistic for that. Secondly, on the railway front, we've added this vertical by supplying a room air conditioner for railway applications in 2019, and then scaled it up into the metro space, into EV buses, some part of defense applications also. But we were a single product company till now, but now we have added doors and gangways and pantry systems, which has taken our addressable market from 4% bill of material of a passenger car to almost about 10% of a passenger car. And recently we have done a joint venture with Titagarh, where we will be supplying more railway subsystem components to bring up the whole ecosystem of railways.
Right. All right. Mr. Singh, you have given us a fair bit of detail. Consumer durable is still 72% of your business, but the focus on the other two businesses obviously is going to be increasing, since you're saying that the electronic division is going to double its revenues in the next 2 years. So give us a revenue composition. As of now, the consumer durable is 72%. You have electronic division at around 19-20%, and railways, which is growing very well, that's at around 9%. Say in the next 2 years, going by all that you're saying, you have done some inorganic growth, you're focused a lot on diversifying away from consumer durables. how does the revenue pie shape up?
I think if I see last 4 years journey, we have shifted from room AC. Room AC has come down to 38% in the consolidated revenue, and now it will further come down to 30% in next financial year. And electronics from 19%, it will go to about 25-30% in next 2 years. And railway also will add from FY26 onwards, because we've taken a lot of projects. Order book is very strong. So that will start contributing significantly on the console balance sheet.
Right. So these are all numbers for FY26, Mr. Singh, right? Consumer
That's
durables 30, electronics 25, and there'll be railways which will be chunky as well.
Yeah, I spoke about the range. I mean, it's very difficult to pinpoint a single number.
Absolutely.
But yes, that's true. So we are building these two verticals. I mean, we entered into adjacencies. Now we are scaling them up. And we are optimistic for a good growth in both the segments.
We just had the management of Blue Star earlier with us. I'm sure you heard part of the conversation, and he was talking about competitive intensity in room air conditioners being extremely high, right? Margins, etc., would perhaps be slightly on a slope, on the downward slope, not too sharp, but there is pressure. Will some of these electronics, railways, etc., more than make up for if there is a sharp fall off on the room air conditioner side, sharper than what you think, what you forecast?
Yeah, actually, you see, we are a B2B company. So in a B2B space, especially in the room air conditioners, there has been a structural shift. So first, we were hit by 2 COVID waves in the peak of the season. Then competitive landscape changed. And then finally, most of our customers have started the assembly units, manufacturing air conditioners on their own. So we shifted our strategy into components. And the mix of components, we will be setting off the margin decrease in the finished good versus the increase in this component sector. Plus, electronics and railway application will increase the margin of overall balance sheet.
Okay.
Mr. Singh, sorry, just one more thing. On railways, you said that you are now, your total addressable market is about 10% of a passenger car. You mean a railway coach, right? What is the, in terms of value, what's that number, the TAM on the railway side now that you're targeting?
So on the railway side, one Vande Bharat Express, just for an example, has 16 passenger cars. And in one passenger car, we were addressing earlier just 4%. Now we have moved to 10%. That means we will be addressing about 75 to 80 lakh rupees per passenger car. With the joint venture with Titagarh, now we are building up more component ecosystem. There we will be total addressing about 2 crore to 2.5 crores in a one passenger car. So we are building up many components as a consolidated solution provider for the railway ecosystem. So now you can understand that, there have been railway ministries notification announcements that there will be about 3,000 new Vande Bharat Express plus 25 new cities will be having new metro lines, and existing metro lines are increasing its length. So that means we are talking of almost about 10 to 12 billion dollar worth of the total addressable market for our kind of a components which we will be delivering in next 4 to 5 years.
So that's 10 to 12 billion dollars of an addressable market for your kind of components in the railway system space. I just want to understand what's the order book currently that you have just from railways, and what does that feature in as a percentage of your total order book?
So we have order book of almost about 2,000 crores in our railway segment.
Okay.
And what we have done is basically from room air conditioner. Room air conditioner is about 25 to 28,000 crore market, and on the manufacturing footprint it converts into 17,000 crore. So almost $2 billion. So what we have done is we've increased 2 adjacencies, electronics and railways. So in railways, addressable market for next 4-5 years is about $10 billion. Looking into if all the announcements done by Ministry of Railways are actually implemented. And in electronic EMS, that electronics is a big space. Already $118 billion worth of electronics are getting manufactured. But if I speak about TAM of what Amber is delivering, PCBA and PCB, this will be a good addressable market of $25 to $30 billion moving forward in next 5 years.
So you said your order book currently is 2,000 crores, right? What is the order visibility? I understand the addressable market, but over and above this 2,000 crores, what is the order visibility from railways over next 12 to 18 months?
So in 12 to 18 months, like these, all 2,000 crore projects have to be delivered in the next 4 years. And plus, there are additional new tenders which are coming next financial year. So it will keep on rolling on the basis of the announcements done by the Ministry of Railway and Urban Development Ministry for the metro space.
All right. Profitability is something that the street looks forward to, Mr. Singh. So before we let you go, wanted the guidance on that front, because you were guiding that margins, I think, move to around 7.5% in the next year, I think FY25 and FY26. So give us an updated margin guidance, point number one. And you've spent a lot, on capacity expansion, etc. And the street was hoping that the ROCE will start improving to high teens. So what is the guidance there? I think you were talking about 19% in 2026. Please give us a number on both these two, margins and ROCE.
So yes, you're right. Margins, we are looking towards 7.5% moving forward in next financial year. And further, we will be increasing our margins in FY26 also, because our railway order book, which will start delivering, and electronics also, we've started, we will be touching almost about 7.5% or 7 to 7.5%. And on the guidance of ROCE, we have already guided. I'll again repeat that in next 3 years, we will be in the range of 19 to 21%.
All right. And you also, at the start of this interview, briefly mentioned about some defense potential business coming in. What is the update out there?
We've already started delivering defense products in our railway, the applications of the mobility, where we've started getting orders. Almost about 5% of the order book, I think, of complete order book will be coming from defense this side. And electronics, the products are under approvals. I believe in next 4 quarters, we should be receiving those approvals. And from FY26, we will start supplying those products in electronics.
Okay, Mr. Singh, thank you very much for joining us. Great to speak with you here on CNBC-TV18. It's a pleasure. Good luck, sir. That's Amber with Perspective. Stock's absolutely flat right now. Let's talk about Chola next. The stock has been a bit of an underperformer. Of course, it's if you stretch that timeline out a little bit, it's one of the best performing names. In the third quarter, the company saw degrowth in the new business segment disbursals. Of course, that's been a conscious kind of a move from the company. We have Mr. Arul Selvan, President and Chief Financial Officer at the company, joining in to take some questions. So, Mr. Selvan, great to have you back on the program. Thanks very much. The last time we spoke with you, sir, this was at the end of, I think, Jan, you'd said that you are recalibrating growth on the fintech-led unsecured personal loans business, right? And you've been, I think, for the last 2 quarters, guiding for some slowdown on the asset growth side. Could you talk to us about how this quarter so far is panning out? Overall, for the business, for the new business segment in particular. And second, lately we've seen so much more from the Reserve Bank of India. And the general impression the street is making of some of these circulars, etc., is that, RBI is kind of stepping up. A lot of it, of course, is compliance-led with individual cases, etc., you might have noticed. So I just wanted your thoughts on that as well. How is that impacting any decisions you're making in terms of how you are sort of conducting business? Go on, Mr. Selvan.
Yeah. So disbursement is doing well. As a matter of fact, quarter over quarter, that's Q3 over Q4, we should be better than Q3. But as I was indicating earlier, last year Q4 was a very good quarter. Last year Q4 versus this year Q4, you may not see a 40%, 30% level of growth levels, which we have seen in Q1 and Q2 of this year, primarily because the base was low. So you'll see growth happening. Growth is happening in used, growth is happening in PV, growth is happening in construction equipment. And heavies have also started growing a bit. So we should have a good growth. LAP and HL, which are our, the old products, which have now been scaling up in other geographies, is also doing good. So their scale up will also be, bringing in higher disbursements and thereby bringing up the closing assets. Net, I think we should have a decent growth. As I was indicating earlier also, the asset growth should stabilize at around 30% levels for the current financial year over previous financial year. With regard to the RBI circular, I think I wouldn't want to comment anything. We are not into those businesses like a gold loan or into lending against shares, etc. So we are not concerned. And as far as our RBI audit and other regulatory forbearance, we have had good relationship and we have not faced any challenges with regard to any of their comments during the audit or post the audit.
The partnership business, Mr. Selvan, how is that? Could you give us some color? How is that panning out?
Yeah, the partnership business is now again, earlier you have seen the growth to be a little higher because the base was lower. Now it is, stabilizing. Yes, consciously we are also, wanting to little bit keep it on a much safer ground considering the regulatory forbearance out there. As indicated earlier, even before the RBI circular in this regard, commented during our investor day, 1 or 2 index we will be moving out and which we have moved out. The rest we are doing decent business and we will continue to focus there. We have a reasonably good profit, their ROA accretive. So we see that happening. As long as we run it tightly, we should have no major issues arising from that.
Sure. Sir, good morning and thanks a lot for joining in. I had a couple of questions on the vehicle piece itself, right? You spoke about growth over there. But within that, what we are noticing in the heavy commercial vehicle space, for example, is that a lot of these large players are seeing a moderation in growth, whether it's Tata Motors, whether it's Ashok Leyland, even a couple of the other players like Eicher Motors. And they speak about how it could be because of the high base of last year, but growth has moderated in certain segments. It could be led to several factors, especially in the heavy commercial vehicle space. Your thoughts here, and what do you see as the tenure as we move into election season?
The heavy commercial vehicle is a yield-sensitive product. So when cost of funds moves up, we will have challenges in funding this product at a very low yield because we will not want to have this product, any product for that matter, being ROA impacting the ROA in a negative way. So at these yields, you will not get more than 2% or 2.5% post-tax ROA. As you know, our target is to have 3.5% ROA, pre-tax ROA. So that's where we have also slowed down, and I presume that could be the reason for some of the other NBFCs coming down. But the banks will still fund fleet operators because they have the power of the cost of funds.
Okay, so banks will fund fleet operators, but you're saying that a little bit of slowdown has happened. What do you think the growth could be for your vehicle segment? I'm looking at AUM growth, sustainable over the next couple of years, both in FY20 by the end of FY24 and 25.
See, vehicle finance in our portfolio has a large, gamut of products, right from heavies, lights, mini lights, tractors, two-wheelers, passenger cars, and construction equipment, and use segments in each of these varieties. So, and we have demonstrated over the period our ability to move up and move down the volumes in each of these product lines. So that's what we will be doing. So while we will not have growth levels of 25-30% in vehicle finance, but it will still clock anywhere between 18 to 25%. And there is a very large industry level happening. We don't see that. I think, if the coming election throws up a reasonably good results and a strong government comes into play, then we should have a continuing impact, a positive impact of growth in India. And we see that, impacting us favorably.
All right, Mr. Selvan, we missed that number. You said the targeted ROA and ROE is? Mr. Selvan?
Say full company as a whole. I was talking. Can you hear me?
Yes, sir. Yes, sir.
Hello. I was not talking about the ROAs and ROEs of a company as a whole. I was more talking about the ROAs and ROEs of the vehicle finance, more so on the heavy commercial. Overall, I was telling that the company always targets a pre-tax ROA of around 3.5%. Yes, to that extent, we stick to our level. While we may not, we may be marginally lower or marginally different from our target in this current financial year, but I think over cycles, we should continue to achieve that. And with the new products kicking in, we should improve it in the years to come.
Okay, and finally, give us a sense about how the cost of funds are shaping up and what should the targeted NIMs look like?
The cost of funds have more or less stabilized. I think we should be at similar levels. And I mean, going by the market news, the expectation seems to be in the second half of FY25 that we can expect some cost of fund reduction. The cost of fund levels and the NIM levels would be at the pre-COVID levels for Chola. So we should be in the range of around 7.5% NIM levels as we move into these levels of cost of funds.
Okay, all right, Mr. Selvan, we appreciate you stopping by and filling us in with that broad guidance going ahead. Wishing you all the best, and we look forward to chatting up with you at the end of the quarterly results as well. Well, for the time being, the markets have taken actually a bit of a U-turn. The Nifty Bank, we had highlighted this earlier, that if the Nifty needs to move up, you need the Nifty Bank to head towards a fresh all-time high. And that's not happened. At least as of now, the Nifty Bank has moved towards the day's low. It's down by close to 200 points. And that's the one that's pulling the Nifty as well lower. And the advanced decline ratio, now you have two stocks that are declining for one stock that's advancing. So we started off with more number of advances. That U-turned, and now, in fact, they're moving apart from each other. Mitesh Shankar is back with us. Mitesh, I think earlier this morning you were maintaining a positive bias on both the headline indices at least. At what point of time would you choose to buy into the Nifty? We are holding around 22,450.
Yeah. So Nigel, between the two indices, I think Nifty is the better one in terms of relative strength on the short-term charts. The buying zone for me is around 22,430, 420 on the spot. So another 25, 30 points lower, I think would suggest a long trade with a stop below 22,390. And on the upside, the near-term target, which could be a 1-2 day, 3 day kind of a target, is 22,500. But I think 22,600 plus is what I'm eventually looking at, a slightly swing kind of a trade on the hourly chart. So in that sense, I think, buying around 22,430 with a 50-point stop loss could be a good risk-reward equation. Having said that, the stocks that are on my radar right now, Cipla, I think, is breaking out nicely. So that's a buy with a stop below 1495. Look for targets of 1560 here. And the other one which I like for a trading bet is L&T Finance, which is a negative or a sell call. Recommended selling here with a stop just above levels of 163 and a target of around 150, 149 can be looked at.
Okay, by the way, Cipla is at a fresh record high this morning. We understand. I just saw it flash on the ticker. So 1,500 on Cipla. That's a growth of 21% the stock has seen this year. And it's a fresh high that Cipla has hit this morning. Glenmark Pharma is also at a fresh 52-week high. It's at 960 rupees. I remember Glenmark was stuck at, 500, 600 for the longest time. And the breakout actually just happened in the last 6-8 months. So in the last 1 month, it's a 14% rally that Glenmark has seen, and now at a fresh 52-week high. But let's talk about some more stocks that are on the move. First up is Tata Sons. One of the big stars of last week was Tata Chemicals, which rallied 40% over the last 6 sessions. And the reason which was cited was a report from Spark Capital, which suggested that the value of Tata Chemicals holding in Tata Sons was responsible for 80% of Tata Chemicals' market cap, basically suggesting that the intrinsic business was very, very cheap. In fact, Prashant had highlighted this on Friday, where he looked at numbers post the rally. Guess what? Tata Chemicals' FY25 PE had moved up to nearly 18 times from around 12 times. So it is expensive now. Why was the market focused on Tata Sons? Well, that's because Tata Sons was classified as an upper layer NBFC in September 2022, which meant that it had to list within 3 years by September of 2025, basically a year and a half from now. But now we learn from sources that Tata Sons listing in the foreseeable future is unlikely. Tata Sons is considering multiple options to comply with the RBI's upper tier NBFC norms. These options include either reducing their debt, Hiving of Tata Capital could also be considered. Tata Sons has offered no comment when we reached out to them for a response to our story. But for the Tata Chemical stock, this is a clear negative news coming in from a price action perspective, and hence you might see a little bit of the stock under pressure. But let's also focus on another group company, which is Tata Power, which has been quite strong in the last many weeks and months. Vivek is here to tell us more about that. Vivek, over to you.
Well, that's right. Actually, the stock that you're talking about is Torrent Power. Tata Power, of course, was in news on Thursday on the back of the fact that you actually saw, price hike coming across as far as the Mumbai Discom was concerned. This is something that the company had been asking, and it turned out the verdict did come in the favor of Tata Power. But the stock, that's actually doing quite well today is also Torrent Power, given the fact that the company has received the LOA, the letter of award, for supply of over 306 megawatt solar power from the Maharashtra State Electricity Distribution Company. The letter of award has been received for the feeder level solarization under the PM Kusum scheme. And this particular project commissioning is expected over the next 18 months. The estimated cost that Torrent Power will incur is 1,540 crore. The tariff is rupees 3.1 rupees for per kilowatt hour, and this particular extension or the time period of this particular project is 25 years. The PPA has already been signed, so that is a clear positive as far as Torrent Power is concerned. With this, Torrent Power's renewable capacity increases up to 1.7 gigawatt. Renewable capacity addition will move up to almost 3 gigawatts. So some positive development in terms of solar power capacity addition and the signing of the PPA for Torrent Power.
Okay, all right, Vivek, thanks a lot for that. Well, time to slip into a short break, but on the other side, we'll focus on the commodity space. Manisha Gupta will be joining in. Stay with us.
Welcome back. Well, shifting focus to the commodity markets, Manisha Gupta is joining in. Manisha, what's the one commodity that you're tracking today?
Well, Sonia, I'm looking at rubber, and most of the industrial commodities, by the way, are doing quite well, and rubber prices in the recent months have been climbing. Actually, 2023 wasn't such a great year for the prices, but 24 definitely has started on a very strong note. So we are trading at a 2-year highs right now. The Indian prices have been on an upside as well. The consumption has been more than the production, and that is the reason you are looking at support coming in. So we have seen prices gain up by 2% in last 1 week, and it's up by 6.5% in the last 1 month as well. There are supply concerns coming in from the producing countries. There have been weather concerns, pest concerns, and is the reason that Thailand, Indonesia and Malaysia, this is where the maximum rubber comes in from the global markets, are looking at lower quantity this time around in sense of production and exports as well. Also, one of the latest reports suggests that Vietnam natural rubber export volume has declined by 161% in the month of Feb, and this is on a month-on-month basis. That has been supportive also. The European Union deforestation regulations is something that the markets are reading upon. And then it is also about the weakness in US dollar index. That one is trading at around 8-week lows. That has been supportive. We've seen better than trade data from China, and that demand improving from the auto and tire manufacturing companies has been on the higher side. A report from S&P Global suggests that the global automotive demand in the month of Feb has gained up by 1.7% on an year-on-year basis. So rubber clearly seems to be taking all the cues from there. When you look at the international markets then, and we are looking at higher consumption patterns there too. When you look at the global rubber, well, the estimates for 2024 are that you could be looking at a production of around 15.05 million tons, while the consumption is anticipated at 15.52 million tons. Remember, rubber has been in deficit since 2021, and 24 doesn't seem to be turning anywhere different then. Look at the Indian markets as well, and here as well, the dependence on imports has been increasing. This is the production trends where we have seen the production kind of continue to gain up for this year as well, 8.75 lakh tons of a production, but the consumption has been jumping by leaps and bounds, and the markets do suggest that you could be looking at higher rubber prices from here as well. A very conservative estimate of around 8 to 10% of an increase in prices is what the industry is working with.
All right, let's take a quick break on that note. Thanks a lot, Manisha, for that. Up next, we'll get chatting with two gentlemen, Sandeep Parekh of FinSec Law Advisors and JN Gupta, the former executive director of the SEBI, to talk about the recent regulatory actions that have taken place, especially in the NBFC space. So more on that in a bit. Welcome to Bazaar Corporate Radar. Well, recently you've heard of a lot of regulatory actions and governance that has come through in the spotlight. The RBI has tightened its grip on the NBFC space with the recent crackdown on JM Financial and IIFL Finance. SEBI is also taking some corporate governance action where it barred Z promoters from holding key positions. It has also warned Vedanta to strengthen internal controls for corporate announcements. Sandeep Parekh of FinSec Law Advisors and J.N. Gupta, the former executive director of SEBI, join in now to talk about that. Gentlemen, morning to both of you. Mr. Gupta, I want to start with you first. There's a lot of regulatory action and governance that has suddenly come into the spotlight. What is the big takeaway from this? Is it that there's genuinely a lot of lapses in terms of governance in many of these companies in the NBFC space, or is it just proactive measures from the regulators?
See, I would say let us not generalize anything at this stage. It could be one-off actions or it could be a signal for greater malaise in the system. We do not know at this stage. What we can say at this stage is yes, there are lapses at various levels, and both the regulators, RBI and SEBI, have come out with their respective orders or advisory, and actions is being taken. Now we have to see what happens thereafter. In most of the cases, nobody goes against RBI to the court or anywhere. But in case of SEBI, everybody goes to the court. So let us wait and see who goes to SAT against SEBI. But I would say it is all culmination of issues where NBFC have been an area where a lot of regulatory oversight, although it theoretically is there, but in practical terms it was not there. But now looking into the importance that it is gaining, and that every other place you have got lot of oversight, probably a little bit attention more is being paid to NBFC sector.
And that's always a good thing, right? I mean, as you said, we should not jump to conclusions at the moment. We're not sure if this is a larger malaise in the system or it's just a one-off case. Got that. Sandeep Parekh is also with us. Sandeep, eventually, of course, cleansing of the system is always good for the longer term. But what happens in the near term? Do you see such more of such instances come through? Because it's not just one instance, right? It was back-to-back many companies that were brought in the spotlight and governance issues spoken about as well, or at least allegations made. Your thoughts on how this is going to play out going forward?
Yeah, hi, Punya. So I think I echo what Mr. Gupta just said. In addition, I think, really there are two separate things which are happening in parallel. And, I think it's good to kind of segregate the two. One is the enforcement action that you mentioned. And the second is the RBI is also trying to be a counter-cyclical regulator, which means, they have their eyes on inflation and they don't want too much money. They don't want too much fraud happening in the system, which they seem to suggest is going on. So I think it's the two things are going on at the same time, which is obviously having an even larger impact in terms of, how RBI is looking at NBFCs today. The second kind of preliminary point really is in terms of enforcement action. I think I don't think it's really connected to the first point of counter-cyclical measures. I think this is kind of trying to clean the market really, and like Mr. Gupta said, we'll see how much of it sustains and how much of it is kind of either turned down or stayed by appellate courts or in courts, etc. So I think enforcement action is completely separate from the counter-cyclical measures which RBI is doing, but they're happening at the same time. So it's looking kind of lot more harsher for the entire financial system compared to if they were not happening. And then finally, I think it's good that the cleanup is happening, of course, because in times of frauds is when the largest malpractices happen, or kind of people take it too easy. So I think it's probably a good time to kind of take enforcement action.
Okay, good time to take enforcement action. Mr. Gupta, let's talk about the two incidents, right? And in the two spaces that it happened. So the RBI barred IIFL from giving any new loans against gold and JM Financial from giving loans against security. So there is gold, there is loans against security, there's also IPO financing on which the RBI is taking action. What is the impact that you think this would have on the markets? And secondly, do you see any more segments where there could be some stringent action or some proactive measures taken by the regulators?
See, I will answer the second part of your question first. I am neither an astrologer nor a visionary to say that what further action would be happening in what space. But I would say the action that have been taken is very clear that these areas, either whether it is gold loan or loan against debenture or whatever IPO financing, was an area, although everybody has been talking, but it was not looked into that seriously. Now the two cases have come to the light. It will have a cleaning effect in the system, because now those people who were in the comfort that, okay, we are away from the radar of RBI or SEBI, would wake up and say the action could be taken. So I would say in a long term, it is a positive for the market and the system, as the integrity will improve as more and more cases, if at all, comes into the open, so that the company or anybody who's involved in this would think twice or thrice before doing anything which can be caught or which will be on the other side of the regulation. That is one part. The second part is this should also give some sort of a indication to the customer also that, look, what you have been doing was not permitted or what not on the right side of the law. And maybe some customers will also be enlightened and will stay away from this. But again, the memory is short. Something will happen after 1 or 2 years, people will forget it and may start doing again. So that is where the problem will remain for regulators to all time to come.
Sandeep, a final word from your end. This seems to be a widening crackdown on the sector on the whole, right? Many segments are being targeted. It's not just a one-off. What do you think the repercussions of this could be?
So I think, like I said, I think two parallel things are happening. One is crackdown on the liquidity, and the second is kind of a crackdown on the enforcement side. And I think one thing which I think the regulators need to do better would be to kind of, for instance, RBI should come out with a detailed order, as does IRD and SEBI, so that people can judge for themselves. As national justice requires a detailed order as to what went wrong, and again, it would help the entire system itself. They know what to do, what not to do. So I think these one-page orders are kind of not helpful for the system as such, because people don't know what has been violated, when it has been violated, whether the punishment was proportionate to the offense created. So I think I think RBI needs to learn a bit from SEBI in terms of its national justice process.
All right, gentlemen, we could have continued this discussion endlessly, but we have to sort of wind down the show. Mr. Gupta and Sandeep, thank you so much for joining in. Always a good thing when such issues are taken up and, such malpractices are put an end to, and the regulators are doing just that. With that, it is a wrap on Bazaar. Thanks a lot for watching, but don't go anywhere. Lots of stock action coming up on our next show, Chartbusters. Stay tuned.
Tata Group stocks slump after sources tell CNBC-TV18 it is unlikely that Tata Sons will be in the list or will be listing for the foreseeable future. Tata Consumer Products and Tata Steel are also among the top Nifty losers. The biggest of them, although, is Tata Chem, down 10%. Life insurance stocks trade largely lower or some of them higher on the back of strong business in February. Premium retail and annual premium equalized both surged on a year-on-year basis. Titagarh Rail Systems surges over 3% after it bags an order worth over 1,900 crores coming in from the railway board to supply nearly 4,500 wagons. Dwarikesh Sugar surges after the board approves a buyback of 1.6% equity. The aggregate buyback consideration is up to 31.5 crore rupees, priced at 105 rupees a share. We also have shares of Macrotech Developers higher in today's trading session. The companies completed the raising of 3,300 crore rupees via a QIP.
Hello and welcome to Chartbusters. I'm Nigel D'Souza. Joining me is Mangalam Malu. Well, Mangalam, that's sort of a day, right? Sideways move on the Nifty. Then, in fact, we moved a little bit low by down close to around 5% from the top. And the Nifty Bank is the one that's dragging. That's down close to around 200 points. But the real pain pocket is the broader markets today. Way more number of stocks declining than advancing.
Yep, we saw a day of broader market outperformance on Thursday. Before that, there was broader market underperformance, and now broader market underperformance has begun once again. The markets, again, like Nigel said, have been sideways. It's early days in the week. Let's see where we go from here. A bunch of triggers coming in from both the globe and local too. Meanwhile, just keep an eye out on one pocket that's doing well today. That's the FMCG pack. We have Britannia.